The Toronto real estate market did something that completely blindsided me for 2026. Last month, I was absolutely certain that February of 2026 was going to be a great month compared to February 2025, which was probably one of the worst months on record, mostly caused by the Trump tariffs. Now, looking back at 2025, it looks like the good old days relative to what we're starting to see now in 2026. I actually had to really deep dive the data this time because I'm trying to understand, did the real estate market break character, where meaning we're no longer following anything seasonal? Is this an issue of property or sales mix where maybe certain types of properties are dragging everybody down? Or is it based on some sort of areas that they're really underperforming, dragging everybody else down? So we're going to start with our favorite graph. This is the call it good news graph, if you would even want to call it that. This is GTA median price, and it's finally clawing its way out of the hole. It's following seasonal trend, which is basically the real estate version of showing up to work on time. I mean, it's great. It's happening. We have trend. We know we're going to probably keep climbing into March and April, and it probably is going to fall off a cliff like the last 3 years. That being said, the good news ends here. We're going to take a look at activity just quickly so that you understand a bit of context in terms of how pricing homes and a little bit of the behavior on the buyer and seller side. So this is activity as per Broker Bay, which is our internal system on the back end where we see offers and showings for particular areas, something I keep a very close eye on. So showings are up year over year and month over month. Now, on average, a listing is getting about 23 showings before it actually sells. And that's basically a lot of people walking through your house, judging your choice of backsplash and then doing absolutely nothing about it, which is totally normal. Why is this important? This slide summarizes a lot of the conversations that are happening right now with sellers on listings that have been sitting on the market for a while. Showings are as good of an indicator as you're going to get right now in this market in terms of how overpriced your property is. So let's say in a typical listing, obviously this will vary on where you are, but if you get less than 5 showings in a month, and I know that sounds crazy, you're probably overpriced to the tune of 10 to 15%, if not more. If you're getting, a couple of showings here and there, some low ball offers over, 2 to 3 weeks, likely you're overpriced between 5 and 10%. The reason this is important, it kind of tells you the disparity in terms of values and expectations between buyers and sellers right now currently. And now here's what you came for, the bad news. First, a little bit of good news here is that new listings are actually at seasonal trend. This is the first time this has ever happened in probably 4 years. I haven't looked back all the way, but this is interesting. I don't think this is telling of a trend, or it's not a new trend that's starting, but it is interesting nonetheless. It is, as it's the only kind of normal thing that's happening right now. But this is where the issue is. Sales are still in the basement. So last month I would have been willing to bet some money that sales would have been really way up relative to February of 2025. And they were not. They were actually lower. So this is why I was blindsided. It's kind of like the stats were listening to me and I said, hey, February of 2026 are going to be great. And then they said, you know what, hold my beer, watch what I'm going to do. So here we are, the worst February now on record. The new record has been set. Will this continue into the future? I mean, it's hard to say. I have said in the past, the first 60 days of any year kind of set the trend for the rest of the year. So if we're to go based on that metric, we're in for probably a worse 2026 than 2025. But the optimist in me feels that it's a little bit too early to tell. So I don't know. It's way too early to tell. Now, as part of my deep dive, I had to look at different locations and sales transaction volume over the last 3 years. And this is our 4th year. There's no point to look at years prior to that. They were just anomaly years. These years are kind of comparable, as you can see. So 2026, here's how bad things are. So we're substantially lower than 2025, which was awful. And so are these years right here. So I don't even know what awful even means at this point. So I was thinking to myself, okay, it's got to be a property type that's causing this, or maybe it's a specific area. When we take a look at all areas and we look at detached, just detached alone, we're actually very close to our 2025 numbers. So detached, if you're watching detached, which is where I spend most of my time, this is where my clients are transacting the most. If you're looking at specific area in Markham or Mississauga or Toronto, it kind of might feel like it's business as usual because it is. So the transaction volume is relatively similar. So where is this happening? Is it in Peel? Is it in Halton? Well, I can tell you that even if you break it down by different parts of the GTA, Peel is performing a little bit worse. But then again, once you start splitting into different price points, it kind of averages out. So it's not area specific. It seems like this is structural. This is across the board. However, On the property type side, this is condos. So condos are actually substantially lower than 2025, but that does not explain the drop in activity. So condos, while they're attributing a little bit to it, they're not the explanation. This is a structural issue. The real estate market has broken character. So people have been screaming about a crash for the last 3 years. While it's been just a very slow and steady decline, it's been for the most part flat, except 2025, we saw numbers kind of go down. But I can tell you right now that we are breaking character, and this is looking crashy, meaning 2026 has the writing on the wall to be a down year. I hope you enjoyed this analysis, and I'll see you in the next one.